we've seen in the price movement in gold more recently concerning in any way. And I'm going to broaden this out a little bit and maybe talk about gold and silver in combination. Good afternoon. Jobs are the headline for this week with a bit of a surprise in the jobs report here recently. So we will cover that and a little bit more here in this week's market update. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to leave you feeling more empowered after each of these kind of quick updates and hopefully weed out a lot of the noise in the markets and the day-to-day along the way. Again, this week, the main focus is really going to be around that surprise jobs report. So just yesterday on Wednesday, we had the employment report came out. This shows that we added 130,000 jobs versus, depending on where you looked, 55, 65, somewhere like that, 1,000 were expected. And so quite the surprise on the upside. This brought the unemployment rate down to 4.3% as a result. And this very strong, although it's one, but very strong jobs report started to show some Fed cut bets kind of being a little quieter or being a little more muted. So we saw interest rates on treasuries spike quite a bit as a result of this. All of that means that generally bonds come, when interest rates rise, bonds come down. As a quick refresher, if it helps, for those who maybe have not heard us share this before, but there's a bit of an inverse relationship. So when interest rates rise on bonds, again, the price of the underlying bond comes down. The reason for that is, if you're holding a bond at 4% and all of a sudden bonds are paying 5% for the same machine, you would much rather have the 5% version. So again, if rates go up, your 4% machine might be worth less, generally speaking. Right. So again, as a result of what we saw here in the very strong jobs report, we basically saw yields spike as a result, primarily, under the idea that it's possible the Fed may not be cutting quite as soon or maybe even as frequent as many had thought going into that number. Now, I will share it's one report. A trend is more important to watch here for sure, but nonetheless, it is important. And coming up, we were supposed to get CPI numbers, I believe, but that's being pushed. So we have CPI coming out tomorrow, which is inflation. And if the labor market remains strong and inflation remains high, that's ultimately what the market is looking at and why they're suggesting maybe the Fed might not be on the same path as some investors thought coming into the year. On top of that, we also had retail sales come out. Retail sales were basically flat. And then for those in the Pacific Northwest, the big news, of course, is that the Seahawks won the Super Bowl. So a very exciting time for us here up in Washington State and really all the Pacific Northwest fans of the Seahawks in general. But very exciting game, very exciting to see. And that was the big news over the weekend for us around here anyway. Be sure to, before we break, we will also touch on a great question of the week. But before we break, be sure to tune in next week. We have coming up CPI data. We have markets closed on Monday for the holidays. So just as a heads up, markets will be closed on Monday. And then we have the Fed meeting minutes that come out on Wednesday. But before we wrap up this week, we have a great question from John, which is really around gold. The question is what we've seen in the price movement in gold more recently concerning in any way? And I'm going to broaden this out a little bit and maybe talk about gold and silver in combination. And what I will share is that I think that what we've seen more recently is not cause for huge concern in and of itself. Now, that said, I will share that, we have a commodities exposure in our clients' portfolios, and gold and silver being a significant component of that. It's done very, very well lately, but what we've looked at is, kind of pulling some of that back and waiting to see how this shakes out, because we have seen a significant run over time. Generally, these are safe haven assets, which is great if there's any volatility in how we look at it. But if it's not going to work in that capacity, we want to kind of see how the markets react here. So I wouldn't say it's concerning in and of itself, but I will share that it is something we are watching very closely, and to the degree that we even reduced our exposure there a little bit to take some chips off the table and see kind of where things go from here and make sure those markets calm down. The reason this is a bit of a concern is because that shift was so abrupt, so quick, so steep that, that can really cause some challenges. And also because a lot of this is typically priced around future contracts and things like that. And so that can create a little bit of challenges as those contracts renew. So again, hopefully that helps. It's been a great shining spot in the market over the last couple of years. And it's been great to be able to participate in that and how we've looked at it in our clients' portfolios. Not to say we're completely concerned about it, but it was enough maybe to at least pull some chips off the table and give it some time to see what comes next. So I hope that helps. I know it's not a direct answer, but that's how we're kind of looking at it. And ultimately, we see this as an opportunity if inflation continues to go, but also, generally this is a safe haven asset. So if the markets pull back, we want to make sure that this is going to respond accordingly and act as a defensive holding. And so that's what we're watching closely, is to make sure that in that scenario, again, that it does perform the way that one might hope for an asset class like gold or silver. So thanks for tuning in. Really good question of the week. Very, very timely. So hopefully that helps. Again, be sure to tune in next week. Remember, markets are closed on Monday, but when we come back next Thursday, we'll cover the CPI numbers, we'll cover the Fed meeting minutes, and any happenings in between. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.